You know, when we hear Larry Fink of BlackRock saying he wants to tokenize everything, you know it's big because it takes a lot to move the needle at BlackRock.
Cathie Wood, the CEO of ARK Invest, just shared an insane theory reaffirming that she still thinks Bitcoin hits 1.5 million in 5 years. Smash the like button. If you're worried about Bitcoin's price sitting at 80K right now, listen to this.
I want to start right with Bitcoin and what you see as the outlook for Bitcoin's price. In recent weeks, you've come out and said $1.5 million per Bitcoin by the year 2030. Since then, though, we've seen quite a few outflows. We've seen a lot of volatility. Shonali just went through that. Is that still your view? 1.5 million by 2030?
Yes, it is our view. I think right now we're in a risk-off period generally. And if you've been watching Bitcoin, it's almost been a leader in terms of risk on, risk off. So I think that's what we're seeing. If you look at our on-chain analytics, what you will see is that we are in the middle of, we're a little bit more than halfway through a 4-year cycle. We think we're still in a bull market. And we believe that the deregulation that we're seeing here in the United States is going to be very important to institutions moving into this new asset class. Asset allocators have to have a point of view on this new asset class. And we think by putting it in portfolios, risk-adjusted returns for the entire portfolio will go up.
Hey, Altcoin Daily Nation. You need to sign up for the Bitcoin Reward Credit Card by our partner Fold. You spend USD on credit and stack real Bitcoin with every purchase. Reserve your spot today. Only so many waitlist spots are being accepted. This is US only. This is the most baller way to stack Bitcoin. You whip out this nice metal Fold credit card and you earn real Bitcoin. This is better than Amex. This is better than Capital One. Use my link below and get on the waitlist immediately. So, why is ARK Invest so confident that Bitcoin is such a good buy right here? See, she understands what you and subscribers to this channel understand. 3 big ideas. Number 1, the United States government is going to continue buying as much Bitcoin as they can in a cost-neutral way. Bo Hines, Trump's executive director of digital assets, says we want to get as much as we can.
Well, you know, we delivered on the president's promises that he made on the campaign trail. You know, the president was adamant about creating the SBR. We wanted to make sure that we did it right in a way that respected Bitcoin for being so unique, and also gave credence to innovation in other spaces of the digital asset world. So, you know, for us here, we look at Bitcoin, it's not a security, it's a commodity. It has intrinsic stored value that's traditionally accepted. It has, as David likes to describe, the immaculate conception. There's no issuer. And you know that's why, as you saw in the executive order, we compared this to digital gold. It's something that's imperative for the United States to have, retain, continue to build on. And I think that's worth pointing out that you know the way that this is constructed, we talked about ways of acquiring more Bitcoin in budget-neutral ways that won't cost the taxpayer a dime. And what I like to say about this president, I think it's high time that our president started accumulating assets for the American people, which is what President Trump is doing, rather than taking it away. And I think that's one thing that we really wanted to make clear in this executive order. And we're looking forward to working with our partners at Treasury and the Secretary of Commerce in order to find those budget-neutral ways in which we can acquire more. You know, I've been asked all the time, it's like, how much do you want? And I said, well, that's like asking a country, how much gold do you want, right? I mean, as much as we can get.
Number 2. Bitcoin sitting at these price levels with such a bullish macro backdrop is a historic entry point. Basically what Michael Saylor explains right here, I don't think most people understand this.
This is kind of a historic entry point because all of the risk has been stripped off the asset. Like, you pretty much know Wall Street's going to embrace it, the U.S. government's going to embrace it, and banks in the U.S. going to embrace it, which means that all the other banks will embrace it. You already know all those things. And yet the market is really skittish based upon concerns about tariffs, you know, the disposition of the U.S. economy, the interest rate forward graph. And so you see the interest rates have pulled in 30, 40, 50 basis points. And we're in this macro risk off zone. When that flips, I think Bitcoin will rip forward with a vengeance.
Number 3. Fed rate cuts. Everybody is projecting that the Fed is not going to cut rates. They're going to continue quantitative tightening is what everybody's thinking about right now. And while the Fed might not cut rates tomorrow, ARK Invest actually thinks that the Fed cuts rates more than most people think this year. This was interesting to me.
What do you see as the rate path for this year? The Federal Reserve kicking off its two-day policy meeting today. We're going to hear from Jay Powell tomorrow. How many rate cuts do you see happening this year, Cathie?
Well, we tend not to be very short term in our focus, but if we're right and inflation is going to surprise on the low side of expectations, we wouldn't be surprised to see 2 or 3 cuts. Now, if you look at an indicator called Trueflation, it's probably the broadest measure of inflation out there. It is saying inflation is down to 1.65%, well below where the Fed is pinning it at roughly the CPI's 2.8%. And we believe that the combination of actually food prices have started coming down. Even egg prices have started to collapse, as a matter of fact. Gasoline prices are coming down. We're seeing some rent prices coming down. So we think inflation is going to surprise on the low side of expectations for those reasons, and because innovation is inherently deflationary. And our 5 innovation platforms are all driving different kinds of deflation, good deflation, which will cause unit growth, but deflation nonetheless. So we think the Fed is going to have many more degrees of freedom in the second half of this year than most people think. We could see more than the number I just suggested, 2 to 3 cuts.
See, what most people fail to understand is Bitcoin could easily still hit $200,000 by the end of this year. And this isn't just according to Cathie Wood or me. Matt Hogan, the CIO of Bitwise, says he's pretty sure Bitcoin hits 150,000, if not 200,000 plus by the end of this year.
There's the strategic Bitcoin reserve. There's the SEC pulling back on essentially every lawsuit. There's progress on stablecoin legislation. There's talk of market structure legislation. There was the White House crypto summit. These are game-changing positive developments that should put Bitcoin trading at $150,000 or $200,000 today. It's been suppressed because in the short term, this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000.
If we get to Wednesday's meeting and it looks like we're not going to see much relief from the government here in the United States, what happens?
If it's sort of the tough parent, stiff upper lip thing, I think it's going to be more market uncertainty. You could see Bitcoin go back to 72,000 to its previous all-time highs. I don't think there's downside really below that. I think there's a great deal of support right there.
And overall, there is a lot of risk in crypto. Many coins will fail. Many coins will succeed. If you want to mitigate risk, just buy Bitcoin, Ethereum, and Solana. At least according to Cathie Wood, she says these are her top 3. Make sure you subscribe to Altcoin Daily for daily crypto videos just like this. Listen to her talk about how she focuses on Bitcoin, Ethereum, and Solana. You tell me if you agree with this.
Cathie, even some of the people who believe most firmly in the crypto story here, they are still worried about those meme coins and a lot of retail investors being stuck holding the bag. And another thing that's happening at the same time is you have a lot of exchanges looking to loosen their listing standards. Do you worry that this could go too far, that too many coins that are going to hurt retail investors ultimately will be listed on too many exchanges?
Well, I think that the SEC did a very important thing in declaring these meme coins not securities. What they essentially were saying is, we are not going to regulate them, and it's buyer beware. And so if I have one message for those listening who are buying meme coins, buyer beware. And I think the message is loud and clear from the regulators. What we think will happen is there will be some fearsome declines in the prices of some of these meme assets. And, there's nothing like losing money for people to learn. And they'll learn that the SEC and regulators are not taking responsibility for these meme coins.
Buyer beware of what specifically? Because you did say that you believe that there are only certain crypto assets that will gain the most spoils. What do buyers need to be aware of?
That the millions of meme coins will probably end up worthless. So when we're talking about the big three, we're talking about Bitcoin, Ethereum, Solana. The use cases for those are multiplying. And we think they're going to become very important in the years ahead. Meme coins, not so.